Hey everybody, welcome back to Chipstock Investor. We have been getting a lot of questions about our power chip basket of stocks. And when I say our power chip basket, what I'm talking about is what you see right here. Power and sensor basket, Onsemi, microchip, monolithic power systems, and then our small bets basket, power and sensor chips, air test systems, and Axcelis technologies. Today we're going to be focusing on Onsemi.
And before we launch into Onsemi, you should probably just mention here that some of you, maybe you're new, you're just showing up, and you know that we cover monolithic power, air test systems, and Axcelis, and you're a little bit miffed that these didn't end up in our top picks for 2025. We are doing things a little bit differently this year. We're not doing a brand new top stocks list at the beginning of the year. We still like the list that we made for 2024, and so we're leaving it. We also provided you with our top holdings in the semiconductor market headed into 2025. We're going to let that suffice. Just let it be known that there's nothing wrong with these businesses in our viewpoint. We still like them. We're monitoring the situation. And so to introduce Onsemi, let's talk about that situation for the auto, industrial, and power chip market for 2025.
If you want to take a look at those videos that Nick is talking about, check the video description. We'll have them linked there as well as here in the video. If you want some more nuanced discussion surrounding these companies and much, much more, check out our Semiconductor Insider membership. You can gain access to our Discord server via a link in the video description. We have a Ko-fi page where you can set that up. Check it out in the link below. Many of you maybe are getting familiar with this chart where we map out the cycle that the semiconductor end markets are in currently. We'll be focusing on auto and industrial today. Last peak in late 2023 and currently bottoming.
We hope.
We hope.
Yeah, that's the expectation that's been set. But this is the problem though, right, Casey? So last summer of 2024, or if you're in the Southern Hemisphere, I guess that would be winter of 2024. We've had that pointed out to us. Sorry about that. We don't want to leave out the Southern Hemisphere. This was the expectation 6-7 months ago, that we were going to have a quick recovery or a quick return to a revenue and sales recovery for power chips, including on semiconductor. That has not panned out. And now we're looking at what we're calling now a U-shaped recovery, incoming perhaps summer 2025. U-shaped recovery, we borrowed that term from Lattice Semiconductor's new CEO, but this is the expectation now for Onsemi and pretty much the entire basket of our power chip holdings. And this is especially troublesome for Air and Axcelis because until there's more pronounced uptick, recovery in revenue for companies like Onsemi, Microchip, Monolithic Power, and their third-party manufacturers, Lattice Semi, take your pick, some of the equipment providers like Air and Axcelis are going to struggle for direction. So that's an important point to think about before we begin talking about Onsemi.
Before we continue, quick word from the sponsor of today's video, Public.com. Public.com is offering a new bond account to stash some uninvested cash.
And in fact, after a recent sell-off in the bond market again, thanks to the Federal Reserve creating more uncertainty about its path of interest rate cuts, that bond account through Public can actually yield you over 6% a year. At times in the last couple of weeks, depending on when you lock in the rate, it's been at an over 7% annualized yield. Not bad, especially if you're looking for maybe an alternative to dividends or some sort of more steady income from your investments.
Just remember that your rate is not locked in until you invest. So check that out in the link below, public.com/CSI, and get your new bond account open with public.com. Even though the end markets that Onsemi participates in have been struggling in the recent quarters, you can see that gross margins have bottomed out at around 45%, which is pretty fantastic because in a previous bottom cycle, Onsemi was around 30% in their gross margin. And the company is overall still profitable.
Yeah, and of particular note here, the company has reshuffled its portfolio of products to really double down on automotive and industrial. Like 80-90% of Onsemi sales are specifically geared towards auto industrial at this point. So this is really where they've repositioned themselves and are betting on their long-term success. And in that basket, of course, lots of power chips and power solutions, as well as various sensors. They're one of the leaders in machine vision, and those cameras can be used in anything from an advanced driver assist system in a car, or it could be the robotic arm on a manufacturing line. So a lot of different applications for these different power chips from Onsemi. But the point is, under new leadership over the last 3 years especially, Onsemi has completely repositioned itself and has really emerged as one of the strongest, at least from a financial standpoint, one of the strongest companies in the IDM space, the integrated device manufacturers, those companies that both design and manufacture their own chips.
Onsemi is really doubling down on their goals. You can see on the very right side of this chart the 2027 targets that they have in place for themselves. You can see that their revenue, they expect to grow to 10 to 12% CAGR, or compound annual growth rate. And then jumping down to the gross margin, we mentioned it's around 45% currently. They expect that to jump up to 53% by 2027. And then on their free cash flow, you can see in Q3 2024, it was around 14%. They expect that to double in a range of 25 to 30% in 2027. Let's take a moment and talk about capital expenditures for Onsemi, because they've really been trying to right size their business.
Yeah, this is obviously a never-ending concern for a manufacturer of semiconductors. You have to be concerned with what you're spending on equipment. And so one of the ways that they expect to get to that free cash flow margin of 25 to 30% in the next couple of years is progressively scaling back their investments, especially on silicon carbide, or SiC, next gen power chips. And you can already see this at work in the recent quarters. We're now well under 200 million in CapEx spending on property and equipment, like manufacturing equipment, in the last couple of quarters, down significantly from the over 400 million they were reporting in Q3 of 2023. And so this is the primary reason why some of the semiconductor manufacturing equipment specialists, not the generalists like Applied Materials that have the ability to pivot their sales to whatever the hot part of the semiconductor manufacturing market is, the specialists like Air Test Systems, obviously they've made their name in particular on testing equipment for silicon carbide, and then as well as others like Axcelis Technologies, specialist in ion implantation, another important ingredient when you're working on power chips, in particular silicon carbide power chips. Some of these companies may continue to struggle until we get confirmation that we're going to have a more dramatic recovery in revenue for these power, industrial, and automotive chips later on in 2025. So maybe just a little nuance to this discussion here. We still have Air and Axcelis in our small cap basket, but we're not currently allocating more money to them yet. Instead, we're thinking some of the companies further down the supply chain, companies that actually develop and make and sell the chips to the end markets, Onsemi, Microchip, Monolithic Power, they should see the recovery first before the market pays more attention to Air and Axcelis. At least that's our current view at this time.
Earlier this year, we posited this timeline of events. You can see in 2030, we said possible excess manufacturing capacity, fallout from global overinvestment, friendshoring and onshoring. But what we see actually happening here in early 2025 is that's actually moved up very rapidly to right now. We're seeing some of the effects of that onshoring and friendshoring overcapacity right now.
Yeah, and a lot of this is probably because China has made it a priority to onshore a lot of basic chip component manufacturing, like, for example, power and sensors. These are so-called mature manufacturing processes. The equipment is not off limit for them to purchase and start up a fab. And so that has leveled some hurt on some of the power chip suppliers outside of China, as sales have been a little bit hard to come by for the last year and a half or so. Now, we called the bottom too early last year, obviously, in the auto, industrial, and power chip market. But even at that time, we did point out that the companies entering this cyclical downturn with financial strength are the ones that are most likely to come out on top. Don't try to bottom feed on this, hoping that your YOLO investment into some company that's highly unprofitable in power chip manufacturing is going to make you a millionaire. Probably not going to happen. And like Casey just pointed out on our timeline, that's exactly what is panning out, because Onsemi, with its financial strength, has been mopping the floor with some of the fallout from this overcapacity in manufacturing.
This news brief from late December reports that Onsemi purchased a fab building in DeWitt, New York for just $20 million. And it's interesting because the news brief says that it was actually $100 million spent on constructing this fab in the first place for failed startups Sora and NextGen. Unfortunately, just not every startup can make it.
Yeah, chip manufacturing is very expensive, even in that so-called mature manufacturing process part of the market. It's just not cheap, and it's not easy to get up and running. Case in point, Onsemi made another acquisition recently that we've been talking about over on Semiconductor Insider. This was a little bit earlier in December, right?
Yes, Onsemi acquired the silicon carbide JFET or junction field effect transistor business from Qorvo, which also included the United Silicon Carbide business from Qorvo. They purchased this for just about $115 million in cash. Got two businesses, essentially, got two departments, I could say, for pretty cheap price, really.
Yeah, and this could turn into a sizable business for Onsemi over the course of the next few years. Of course, these silicon carbide JFETs, it's hoped, will play an increasing share in the data center server and AI server market, as a lot of those servers are consuming, as you probably know, massive amounts of electricity, as well as if the EV market ever makes a recovery in North America and Europe. We're hopeful that it will. There's going to be a lot of application for silicon carbide semiconductor devices in that part of the market as well. But just to get back to the point here, companies that are operating from financial strength in the midst of a downturn, here's what Qorvo paid for United Silicon Carbide back in just the end of 2021, a little over 3 years ago. Qorvo didn't disclose exactly what they paid for this business, but you can get a good idea if you do some digging in the quarterly filings. And it's not hard to see that they paid perhaps double or more what Onsemi just paid Qorvo for this United Silicon Carbide business. In Qorvo's fiscal year that ended in April 2022, they spent almost $400 million in cash acquisitions. Not all of that was United SiC, but you get the point here. We've been critical of Qorvo in the past. They are in need now, in the midst of a downturn, to right-size their manufacturing capacity to match the actual customer demand. Onsemi already did this hard work beforehand, and now they're able to go out with their cash on hand and scoop up some real deals from companies that are not operating from a position of strength.
And that position of strength you can see very clearly on the balance sheet for Onsemi. You can keep in mind that this is from the years 20 through 23, and the last 12 months there on the right. Onsemi has $2.7 billion in cash and debt just over $3 billion. Not bad.
Yeah, not bad at all, especially considering this is what the balance sheet looks like after a pretty nasty downturn over the course of the last year. And this is thanks to the fact that the company has continued to be profitable throughout this down cycle. That really means something in a manufacturing industry like this one. Okay, Casey, this is the point where a lot of people are going to fast forward into the video and they want to know about the valuation and ultimately if we're buying on semi stock. So tell me about the valuation.
All right, I will. On a forward basis, you can see price to free cash flow right around 13 to 14x and price to earnings on a forward basis between 16 and 17x. This looks really cheap. However, there's a few things that need to happen for this to be really cheap. And it really all comes down to this slide right here, this U-shaped recovery. Onsemi does look very cheap, but it's only cheap if this is actually what's happening in 2025, that recovery.
Yeah, we need confirmation that revenue growth is indeed back in play. Now, Onsemi has the benefit of being profitable, so that should put a bit of a floor under the stock price in our belief, especially with the valuation already having come down significantly in the last year. But we'll see how this pans out. There are a lot of companies competing in auto and industrial chips and in power chips, especially coming out of China. Onsemi, again, has reshuffled its portfolio to focus on more advanced capabilities in automotive and industrial and power. And so that could help them stave off some of this new competition. But just bear this in mind, folks. We'll be monitoring this very closely. We own Onsemi. We think it's cheap. We're happy to have it in our portfolio, but we're still cautiously optimistic.
Once again, these stocks are not part of our top 10 positions in our portfolio, but that doesn't mean we don't like them. Onsemi, microchip, monolithic power are all part of our auto and industrial and power and sensor basket. And then as far as our small caps go, Air Test Systems and Excelis in this portion of the semiconductor industry. We're very happy to keep them.
Yeah, and we do add to these periodically. We disclose ahead of time when we will be doing so over on Semiconductor Insider on our Discord channel. Check that out. That's also where you'll find all of the research we do on all of these businesses. A lot of moving targets here. Just to reiterate what Casey said, we do like these businesses, and we're hopeful that 2025 will bring better times for this part of the semiconductor market. Join us over on Semi Insider. Do it. We've been told it's a pretty decent value.
Thanks everybody for watching this video. Make sure you sub to the channel, like the video, and share with your friends. See you all soon at Chipstock Investor.
You got this. We're going to have a good day. We're going to have a good Friday.
We're going to try.
I'm having a good Friday. Casey is trying to have a good Friday.
I'm
Okay,
really
let's
trying.
go.